I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show. And today, always another episode answering your questions. And sometimes Tom and I will be brainstorming on our own these ideas as well. So our audience, you won't think of everything. You ask us questions, but we actually are in this business every day, kind of realizing, you know what? I think customers want to know this. Because we receive so many requests, and this episode is about mini cash outs. You will not hear probably any other podcast out there or anybody talking about mini cash outs.
Right. What in the world is a mini cash out? Is that really a thing? And it really doesn't technically exist in that name, but it really is there, and it's right. Something that I personally actually took advantage of probably 4 months ago.
Yeah, Tom came up with that word or that term of mini cash out. You will not find that in any guideline. You will not see that in any marketing.
Right.
But that's exactly what we're going to talk about. So we're going to be the first to market these mini cash outs.
That's right. Now in Investopedia, what's the thing that you look up?
Yeah, the Investopedia is kind of the encyclopedia of money.
Right. Yeah, give it like 36 months and all of a sudden mini cash out will pop up.
Yeah.
But anyway, until then, okay. So why don't we just build some framework? So first off, we're going to be talking about exactly what the name is. There's going to be cash back with this. Okay.
Yeah.
But what's so unique about it?
So how about this? If someone calls us to do a refinance, there's two different options. You can do a cash out refinance, or
at one rate.
Yeah, or another refinance called a rate and term, where you're just lowering the interest rate
at a different interest rate. Yep.
Yeah. So cash out interest rates and rate and term interest rates are different. Cash out interest rates are higher.
And this may seem very obvious, but the reason why they're higher is they just hold more risk for the lender.
Yes.
So not only typically are you taking out more money, hence the cash out, but it also the purpose behind, you're actually pulling money out of the house versus putting money in. So again, cash outs will always have, in almost all scenarios, a higher interest rate than the non-cash out.
That's correct. And this whole mini cash out is a way to take cash out at the lowest interest rates and at the rate and term refinance interest rates. So you're going to get the best rates and be able to take out some cash.
So basically the origin of this is a refinance that I did where I actually received a little bit of cash back. I still did a rate and term, but I actually got some money back. Every refinance never really closes with a 0-0, sum. There's always either we need to bring $50 in, borrower does, or the lender's giving you money back. It's never 0-0. Hopefully that makes sense to everybody. So what we did is we took it one step further. We said, you know what? We can actually, we can push up the amount of money that we get back, even though it's a rate and term, and there's a number, and we actually skip a month or two's mortgage payment after a refi, and we get the escrow money back from our existing old loan. So when you start putting all that together, that can add up to some real money. Yes. So we wanted to kind of talk about that, and that's
right. So what we're going to show on the screen too, if you are watching this on YouTube, is that we're going to show two different scenarios, and we'll try to do our best just to describe them if you're not watching. But one scenario is the median home price. If you have a median, like right there in the average home price, it's that average median home price, right at $300,000. What does that refinance look like on this mini cash out? And what does a mini cash out look like if you are on the high end, $600,000 home value?
Yeah. Well, why don't we just jump into it?
Okay.
So again, the purpose of this is not for any significant cash back. The purpose of this is for someone who calls in, and actually we just had a caller or a borrower call in yesterday and wanted to replace her windows. She needed $10,000.
$10,000. Okay.
$10,000. And sometimes we'll get borrowers that need $8,000, $6,000, $7,000, whatever, to pay off some credit cards.
Yeah.
This is only for those borrowers that would need, something, less than 10,000.
Yeah, and sometimes that's in the form of, you know what? It's been a couple tough months. They've had some bills. By doing this refinance, they're lowering their interest rate, and they're just getting a little bit of reprieve, right? They're just getting a little break on their mortgage payments. And
Hmm.
sometimes it's to pay off that little credit card, but it's just to give them a couple months of just breathing room.
Yeah. And people don't ever think about that going into a refi. They end up coming out of a refi, I think, feeling better than they went into it, partly because they realize I didn't realize there were going to be side benefits to a refi, which
Yeah,
is actually I am getting $580, back because my payoff was lower than I thought, and I'm actually skipping a month's payment. What? I didn't realize that. And whoa, I get the escrow account
yeah.
back, and all of a sudden, boom,
And
those are.
Tom and I want to be really clear. This is not a way to take out cash and, keep your same interest rate. We don't want you to go through the whole burden of and paying all these closing costs just to receive a little bit of cash. The whole goal is to do both at the same time, lower your rate and get this cash.
Hmm.
You know,
Hmm.
we don't want people coming and doing mini cash outs without a real financial benefit,
Right. Yep.
right?
Exactly. Okay. So let's go over the median example. The average example. Home value 300,000. The average loan amount would be probably about 250,000. In this case, I think we said 255,000. It'd have
Mhm.
a monthly payment of about 1,500 a month. And so if you add up these three categories, this is what is going to end up in that pot of that mini cash out. Number one, the max amount of cash back you can get on a rate and term refi. So even though again we're calling this a mini cash out, this is still a rate and term product. The max amount you can get back is going to be the greater of 2,000 or 1% of your loan amount. Okay, so in this case, it's going to be about $2,500. You're going to be able to skip 2 months payments. Now, what that means is if we close your loan in the beginning of a month, you do not have a mortgage payment that month.
Because
And
you can you aren't making your mortgage payment to your old bank. You can actually just add it into your payoff.
that's right. So when we close your loan at the beginning of the month, you no longer are obligated to make any payments to your old lender because we refinanced you. And you do not have a payment in that month of signing. And you don't have a payment the following month. It's not until the following month. So that's going to be 2 months, the equivalent of 2 months payment, which is 1,500 times two. So that's about 3,000. And then the average escrow, and this is really, really difficult. The average escrow refund, is probably $1,000 or so in this case. Could be a little less.
When
It
you
could
say
be.
difficult, you mean just difficult for people to kind of understand escrow accounts and where this refund's coming from.
Well, yeah, and I would say even for myself, if you look at your mortgage statement, you see that you got an escrow balance of X, but you're going to be refinancing here soon, the escrow money you get back is always different than what's on your statement
Yeah, right.
because it
Because
always depends on what's been made, what payments have been made on your behalf prior to that loan actually closing.
right, if you're twice a month, or sorry, twice a year, when taxes are due, that gets a little tricky to estimate. And then
Mm.
right around your homeowner's insurance, uh, annual renewal, that's also a tricky time. But yeah, I mean, talk to us about that. Show us your statements, and that's what we're here for. But yes, those escrow refunds can be a little tricky. But the
Little bit
average, you
tricky.
said that basically the average refund will be
The
about
average,
$1,000.
correct, yeah.
Yeah,
So when you add all those up, that's about $6,600.
yeah.
$6,600. I mean,
They're
that could wipe someone's credit card debt
So they're
on
taking
out.
out. They can take out 2,500 They actually walk away from closing from escrow
Yes.
with
Hmm.
2,500. They get to skip two payments, and they get a refund probably 3 weeks to a month later from their old lender for about $1,000.
That's right. That's right.
Okay.
So the net gain to them, the net benefit to them, it's not all received in cash, but the net benefit when you add it all together is
Mm-hmm.
about 6,600. So
Yes.
that's a really, really big deal. Um anyway, so that's that example. You want to talk about the high example?
Yeah. So let's take someone with a $600,000 house. Let's say that their loan balance is 510,000, and they would have a payment around $3,000. For this scenario, the maximum cash out is going to be 1% of the loan amount, so that'd be about $5,100 that they can actually get a check for $5,100. and not call that would not be called a cash out, and then the refinance is still rate
Not a
term.
not a dollar more.
Yep, just one. So they're receiving 5,100 in a check or wired to them. They are skipping 2 payments. That's about a little over $6,000 in payments skipped. Just that's amazing. And then the average refund, Tom and I are estimating on someone like this, that loan amount would probably be about $3,000. The escrow refund, about 3 weeks after we close, your old lender will mail you about a $3,000 check. It's just an average, and that you add them all up, that financial benefit from this mini cash out would be about $14,000.
14,000. Like, who would have thought?
Yeah.
That's, this is gimmick free. There's nothing in here that is odd or unique. It's just the reality. Now, timing. We just got to make sure that we time it right.
Signing and closing your loan early in the month to get those 2
early
payments.
month. Yes.
Yeah.
Yep.
So
that's key.
We can structure that, and again, this is not for all people, and sometimes it just is better. Sometimes the customer, when we talk about all this, when we structure it, maybe they're okay with just one missed payment or one skipped payment.
Right.
Again, this is not for everybody, but this is for a lot of folks, and they don't even realize that they can do it. And that's why we're bringing the mini cash out to you guys, and hope that actually made sense. And if not, to contact us.
Yeah. Contact us and ask us, hey, tell me more about that mini cash out you talked about. We'd love to talk you through it. I'd love to talk you through it again.
That's right. Everyone, thank you so much for watching, listening on this podcast. Like it, rate us, and go ahead and click subscribe. And if there's anything we can do, be sure to let us know. We're here every week to answer your questions and do this podcast.
All right. We're here to help. Thank you, folks.
Take care, everyone.
All right. Take care.
Hey, guys. Thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917, and 1618695, Equal Housing Lender.